Hello guys, in this video I'm going to be doing the review for the GDX trade that I called out last week. I just want to show you how I approach this as well as some new strategies that you could apply when you do the swing trading. Okay, so on the left side is the daily chart as well as the 15-minute chart on the right side. Okay, you really don't need to look at the 5-minute chart when you do the swing trading because you're going to be holding the contracts for a while. Um, so February 12th, we bought a contract that's going to be expiring in February 22nd, I believe. And when you do the swing trading, you're basically holding it for about a week to have the action placed in. So when we entered the trade on the February 12th, I thought that this was going to be pulled back due to the fact that there was a huge momentum in the earlier days with a nice MACD gap between the um, within the MACD lines, and it had a nice crossing, so which indicated that this was gonna pull back. Um, but it didn't really pull back. It actually went skyrocketed. So this is the time when we entered the puts. Okay, it was around 10 o'clock, I think, and had a nice PPS indicator as well as the huge sell signal, sell volume, as well as the MACD crossing, indicating that this will be coming down. And however, when we enter the trade, um, I just hold it. I just hold it for a week. I mean, for a day, and I just watch the action and how it went. And the next day, GDX actually like skyrocketed. It had a nice breakout, up to 22.30. So early in the morning, as soon as the market opened, it had a nice MACD crossing as well as nice PPS indicator. So I added some call contracts, and in the afternoon, also had a nice PPS indicators of sell signal. So I added another puts, and so you basically have to. So what I call this is a 5-point rule, where I buy either puts or calls through within the next few days, and the last call or put is the one that will make you money. Okay, so I bought puts depending on the indicators, depending on the signals that I got, and as you can see here. And on the last day, which I had to either pick a direction or on whether this stock is gonna go up or down. So for this case, we really have to look at the daily chart as well. So I closely monitored. It was keep trending it was keep trending down as I was expected. However, on the last day that we have to make a decision, it had a nice like a reversal signal with PPS indicator kicking in, and we had a PPS indicator kicking in, very strong one, with large volume, as you can see here, large volume. So I doubled the contract of calls, and waited until the next day. So the next day, it had a huge volume, as well as the MACD forming very nice gap, as well as the momentum, which is a clear sign this was a breakout, as well as the PPS. So when the MACD, when the momentum reversed, in around 1 o'clock, 1 p.m., I sold my calls and I sold my puts in the morning, and I sold my calls in the afternoon, which in return had a nice return over 200 profits. But when you really minus the puts, I had about 100% gain. So this is the trade strategy that I do usually when I do swing trading. This is very effective. Not only decreases the risks, but has a potential to make large amount of money if the stock skyrockets in either direction. So it's really safe play. You don't really lose that much, and this is what you should be doing. And this is what I do when I do, especially when I do swing trading. So that's it for this video. If you have any questions, feel free to ask. I'll be glad to answer your questions. Okay. All right. Take care, guys. Bye bye.